Happy holidays, everyone. We are looking at Costco Wholesale Corporation, ticker symbol COST, and is this buy in 2022? We're going to be talking about Costco and what makes it unique and why people love this stock, and then looking at the fundamentals to see if it's a buy based on discounted free cash flow model and the Buffett-Graham intrinsic value. Just touching upon quickly on the stock, you can see it's $547 a share, down from its all-time high of $560, but if you bought it any time this year, you would have made profit. You can see the start of the year was about $370, March it hit a bottom of around 305 and has had an absolute mammoth run, beating the market by about 20%. This stock has had a crazy run, and we're going to see if it's going to do the same thing in 2022. So Costco is a big box wholesale company, majority in America and Europe, but also in Asia. But what makes this stock different compared to Walmart and Target? Well, this has a club model, membership model, where basically Costco makes a profit before selling a thing. You can see here that anyone who wants to be part of Costco has to buy this membership, $120 a year, and we've got an everyday gold start of $60 a year. This enables you to shop in the warehouses, and obviously the executive has more deals again. So why is this important? Well, as I said, Costco makes a small amount of its money from actually selling goods because it gets the money from its memberships and then passes on the savings to the customer by buying bulk, and then the customer can buy bulk as well. So that is why customers love Costco. The next thing is why this is a good stock is they have a massive retention rate. Because these prices are much lower than the retailers, customers want to go to Costco. My mom and dad have been using Costco for years. Family members have been using Costco. They love it to buy things, and also they have a very high retention rate. This is an article here, how Costco kept its 133 million members hooked through the pandemic. You can see once people go to Costco and use it, they are not really turning back. So let's have a look at the fundamentals of the stock. But first, can you give a like on the video? It really helps me out, keeps me doing these videos, and I'll keep on bringing you great stocks. So currently it has a market cap of 242 billion, consumer defensive section. I think that has a spelling mistake in it. Damn you, Google Sheets. And has a share price of 547. It does pay a dividend, 0.58%. And if you buy it before the 3rd of February, you will be able to get that dividend. So is the PE ratio less than the market? No, it's not. Costco has a high PE ratio of 47.12. With the market being around 28, probably a little bit higher at the minute, but still Costco has a very high PE ratio compared to the market. Next is the revenue increasing. Costco is an absolute revenue monster for a company of its size, 520 billion to 203, so that is a massive pass. Next is the profit increasing. Yes, it is, and the profit and revenue numbers have increased about a fair amount, 3.6 billion to 5.1, so that is a pass again. Are they buying back their shares? No, they're not. 438 million compared to 443, so that is a fail, unfortunately. But on to the next step. Is the free cash flow increasing? Yes, it is. 2.8 billion to 3.5. So overall, that is 3 passes with the 2 failures on the shares outstanding and the PE ratio. And you can see the free cash flow ratio, which is the market cap divided by the free cash flow, is 45, which is pretty close to the PE ratio of the stock as well, which is good to see it in line. But once again, this is a little bit on the high side. Is that 0.58% dividend safe? Yes, it is. 5.3 billion in free cash flow. Dividend is 4.8. So that is a pass. Now let's have a look at my 2 models here. We've got discounted free cash flow and the Buffett-Graham intrinsic value. Let's have a look at discounted free cash flow first. We've calculated the future free cash flows. Pretty bullish case considering what's happening. We're estimating the cash flows are continuing to increase from 2020 highs. Let's see what the model brings. And surprisingly, it does say it is overvalued. Current stock price 547, calculated stock price 46. So that is a fail. Very surprising here, but once again, it does have a very high PE ratio and free cash flow ratio, which is why discounted free cash flow probably won't like it. Let's see if there's a different story in the share price, in the Buffett-Graham intrinsic value. This takes into account earnings per share and expected growth, and then compared against the AAA bond yield. So what does that give us? Well, that actually gives us a fail as well. Fair value of $400 a share, Graham price, which is buy and hold at 300, but we're looking at the fair value here. Funnily enough, both in line, very, very close. So both models are agreeing it is actually overvalued at the minute. I do really like the stock, so I'm quite surprised at that. Now let's just go back to here. Now you can see that basically any time before July was about $400 a share. So it would have been buyers back here, and I would have been interested to see what the model would have done then. But it is interesting to see that it does think it's overvalued. Now, if we just go back that 5 year, and well, let's just go all time. You can see that Costco has been on a pretty much upward trajectory its entire time. So it would be interesting to see a massive pullback to 400. Even if we go to the last 5 years, the stock has never really pulled back that far. So the models are saying it is overvalued, but investors don't really seem to care. And by the stock price going up, that is it. If we just compare it to what analysts are saying it's about a strong buy, but it does have a average target price of about where it is right now at 556, high side 610, even on the lower side 423, which is still substantially higher than what my models are showing. So very interesting that the discounted free cash flow and Buffer Graham intrinsic value doesn't like the stock, but with that high PE ratio, that is one of the problems. But people overall love the stock, and as you can see, it's gone up. So let's just have a look at some of the technicals for the year. Let's get up some moving averages here. With the stock being so bullish, I imagine these moving averages will just be, well, telling you that basically it's a buy. The technicals are probably going to be pretty strong on this. Let's just see what this is saying here. Yeah, but even then it's saying it's a buy. Once again, this is the 50-day moving average. So just quickly, the 50-day has acted as a point of support basically from the March. So here was a point of support, and here, so if the price does drop below, that would be a strong buy. I'm not going to look at the 200 just because it's going to show, well, because of how the stock's going. We'll see how the 100 goes, and you can see that I've replaced it there. The 100 hasn't been broken at all. So if you can see it at the 100-day moving average, that would be a buy. And if you do get to the 50-day moving average, that would be a buy also. So moving averages basically saying the stock is in a pretty bullish uptrend. If we go to the MACD, which is one of my favorites, I imagine, yep, let's go, we're on the daily level here. If you were to use MACD as your main trading thing, and we'll go to the start of the year. So you would have sold once the MACD line sit here, you would have waited, you would have bought at this point, you would have rid the entire way, and you would probably have missed out on these gains here. Then there would have been a buy signal here, a sell signal here where it went flat, and then a buy signal again, and you would have sold at this point. Other things is that the MACD is usually on the positive side, which is another bullish sign, and the histogram, which is these green and red lines, is on the green as well. So it's looking like it's on some red and about to shoot back open again. So this is about to be a buy signal. And finally, we want to look at the RSI, which is the Relative Strength Index. This is whether the stock is in overbought or oversold regions. Right now on the daily, it is about medium, and you can see usually the stock has trended on the daily to about medium, then shot up. The only time it was in the oversold regions was here, and that would have been a massive buy signal. So you could wait like about here, then a buy, that would be a signal. And then let's just have a look at the weeklies. Well, that's a very similar story. This is going back to 2018 here, or mid of 2018, and this stock has only ever been in the buys of March of this year, in the oversold regions of March in this year. So right now it is on the kind of high side, and when we've seen it on the high side, which was equivalent here in September 18, the stock price did drop off. So you could hold off, or short the stock as well, but you could hold off until it goes to sort of a bit of a price correction here, and then you buy up again. But this stock, as you can see here, has been consistently going up for the last 5 years, and it has had these little breakdowns at the back end of 2018, and then once again at the back end of 2020. So overall, I like the stock. The models are saying not really. Analysts are saying a buy. Strong technicals. Fundamentals are solid. It has a moat, but discounted free cash flow and Buffer Graham don't like it. So take with that what you will. Right, guys, thanks for watching. Please give a like on the video. Maybe a little Christmas present for me. I might be doing another video before then. I'll let you know, basically, you'll see. And right, thank you very much, guys. It's been a good 2021. Let's hope 2022 is even better. Catch you guys next time.